All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We've had a lot of disruption in the markets over the last while, about 3 months, and we've seen markets moving up, moving down, big rallies, big sell-offs, a lot of confusion, a lot of chaos, and it's one of those markets we don't see all that often. But when we do, it creates a certain element, creates a certain environment, and that element or environment is one that creates opportunity or creates an element where we see disruption, where we see things trading at levels that you go, wait, something's interesting here, something's wrong here. It's very different from its fundamentals. Or, hey, you know what? This thing is trading very different than the rest of the market. And so maybe something's going on here. And we haven't seen a lot of that in the markets, over the last few years. But through this period, we really have that, taking shape. And I'm going to pause here for a second, just double check that we're streaming. And it looks like we're not. So if you hear me, great. If not, All right. All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm just verifying that the stream is up and running here. I have some test screens here that will kind of play it back at me, and I'm looking at them and they're not playing it back at me. So I will give it a second here. All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Just testing the feed, double checking the feed here, and making sure that we are broadcasting, and it looks like we are not once again. All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Just double checking the broadcast here, make sure we're streaming. Looks like we are. So let's get rolling. Let's just get right into it. Market has had a lot of turmoil over the last several months. Big ups, big downs, a lot of unknowns, a lot of variables, fear, panic, emotion, on both sides, up and down. We've had a market that has created reasons for selling that have nothing to do with the individual stock. And what do we get in those type of environments? We get displacements. We get stocks that, maybe shouldn't have been sold, that get sold. Stocks that shouldn't have been bought, that got bought. People will have buyer's regret. And we will have some trends start to emerge that are very different than what the overall market is doing. And we don't get a lot of these over the years. We used to get about one or two a year. Here we finally have one after a long period of not having one. We had a smaller one back here in February, March of last year. But we've had a really big one right now, where we've had levels of fear, levels of panic, levels of irrationality that have been far higher than what we have seen for a long time. And so I want to go out and take a look at some of the stocks that based on what has happened in the market and what has gone on with these stocks over the last while, I think we can expect these stocks to outperform here in 2019, and in most cases, outperform substantially. Now, notice I said outperform the market. I didn't say these stocks are all going to go up, right? If the market goes down 20%, these stocks aren't immune. These stocks will fall. They will drop. If the market goes, if the market goes up 20%, they'll probably all rise. But what I'm saying is they'll outperform the market. And so things that I would expect to go up to a greater degree than the overall market, but they will be affected by the market, as will everything. But these are some of the stocks that I expect to outperform. Let's start with one of my favorites, KB Home. You've heard me talk about this over the last whiles. We talked about KB Home on the earnings right back here in November, and how this earnings report on KB Home was basically them kitchen sinking it. Basically them coming out and saying, hey, you know what? Yeah, things have gotten a little, have gotten a little worse, and we have some of these fears and all that. And, they laid them all out on the table. We talked about it here. It's going to be hard for KB Home to go lower. And since then, it had a nice little rally, a little bit of pullback with the market, higher low. And today, I prepared these stocks before today, but today actually breaking out. Breaking out why? Well, Lennar came out with news that they are, basically talking their numbers, their margins, their expectations for home sales this year. And, it really put a catalyst in the entire sector. When it comes to KB Home, right, you can see it sold off here in September, October with the market. But this latest sell-off in the market that we saw in December did not cause KB Home to go to a new low. Where the market itself went to a substantial new low, KB Home did not. KB Home set a higher low in that period. We have some positive divergence there. We've also had some good volume flow, which I don't have on this chart. But maybe more importantly, is we have a stock and a company here, if I back this out to a weekly chart, where it went on a monster move here, 2016 and 2017. It's now retraced this move, has created a base at that retracement level, and is starting to push on higher, pushing above its 7-week moving average. Fundamentally, KB Home has a few things going on. Take a look at the revenue. Here's 10-year chart. Here's the revenue for KB Home. Back in 2012, revenue $1.6 billion, now $4.6 billion. Right. Revenue when it hit its lows here in 2016, when the stock hit its lows in 2016, revenue was here just around $3 billion, now 50% higher. Notice how the revenue had continued to go up, even though KB Home stock went down for a few years, right? The revenue had continued to climb, and they've continued to do that. If we just put in valuation metrics, right, like just like a price to book value, for instance, and let's get revenue out of here. You look at KB Home, its price to book value after this pullback is under 1. It is trading below book value. The only time it's done that since the financial crisis was here in 2016, where it went briefly below 1. It is trading at an incredibly cheap price to book value. Price to earnings, PE ratio, 14.8. Expensive? No, not at all, right? You say, well, let's go take a look at a forward PE ratio. That's a little more telling than a regular PE ratio. Forward PE ratio, single digits. One of the lowest that it's been for a long, long time. This is a stock that's gotten absolutely hammered. Absolutely taken to the woodshed from what its highs were. It's a company that, has had some interesting earnings reports. It's a company that is now staring at the face of interest rates actually going down for the first time in a long time, and a Fed who's essentially changing and saying, look, the interest rate environment, we're not going to tighten it much further. We have Lennar that came out this morning and basically said, hey, we expect sales to grow, and sales to grow in a sizable way. A nice positive catalyst. This has been a sector and a group devoid of catalyst, devoid of positive catalyst. Look at the price to sales ratio on KB Home. It's the lowest it's been since 2016, since this low right here. So while, yes, the price of the stock today is higher than it was down here at 2016, the valuation metrics are the same as they were back here in 2016, and the revenue is 50% higher. This is one where it just isn't going to take a lot of good news. It's not going to take a lot of a massive major catalyst. It's just going to need that the economy doesn't flush into the toilet, that we don't see the economy take a big drop lower. KB Home is one of my favorite from a both technical and fundamental standpoint going into next year. And you're not going to be able to go through the news on KB Home and say, oh, here's this great news and that great news, and, this has this positive here. There's going to be a lot of negative, when it comes down to it. There's going to be a lot of negative with KB Home in the news, and rightfully so with some of the stuff. But we are seeing a shift. We are seeing a change in a way that we haven't seen in quite some time here within the housing sector, the housing group. Now, notice something here. I'm going to put in the chart on lumber. You notice anything about KB Home and the price of lumber? Yeah, lumber kind of based and bottomed here 2016 when KB Home did. Lumber prices went on a big move up when KB Home did, and lumber prices have collapsed as KB Home has collapsed. And the rest of the housing sector has collapsed. There's a very strong correlation here between lumber and these housing stocks, this housing sector. But it's also one where this is, yes, a KB Home story, but it is also a sectoral story of the residential construction. And it's one where there are other companies in this group that, are similar in terms of what's going on. You take a look at something like Meritage Homes, MTH, right? Very similar in what's going on. Beazer Home, right? This is a $12 stock that could easily be $24 to $36 going forward. If you're looking at this market and you're saying, you know what, where's an opportunity this year where I can have a stock double for me, and that's not being talked about all the time, not your FANG stocks and all that kind of stuff. Take a look at these home builders. And I know this isn't a place of heavy popularity, but you look at something like William Lyon Home. This thing is notorious for huge moves, right? Went from single digits up to 34, now back down to 11, right? And look at the move that it's made here just recently. This type of massive move, that's typically not the type of move that signals a top. That's typically the type of move that signals, hey, the bottom is in. And, we are seeing the entire sector at a historically cheap fundamental area right now, and one that definitely has a lot of upside to go. Now, staying in similar sector, stock number 2, Lowe's. Lowe's was downgraded today, and it was downgraded, and was up. Actually rallied off it a little bit and has fallen, but Lowe's has a little cyclical nature to lumber. But take a look at Lowe's. Lowe's fell off, had hit a new high. Activist investor stepping in, right? And anytime you see that, generally you're going to see the stock go up. It went up initially, then we had the October market sell off, and Lowe's got hammered with everything else. And then Lowe's, bounced. It didn't bounce all that much, and then went to a new low. But in the December sell-off, Lowe's did not set a new low. And in this recovery, it is erased the entirety of the sell-off in December. we have seen money flow into Lowe's that has been different than many other stocks out there and is outperforming the market on this second dip in a very sizable, very meaningful way. We have the activist investor action looking to unlock value, so there's almost a certainty that there's going to be some sort of positive news come out during the course of this year. If you take a look at Lowe's and you look at some of its metrics, its price to sales is about 1. That's very cheap, no matter who you are, but it's not historically cheap for Lowe's. Its PE ratio is not cheap, right? It's up here at 21, but you look at it, it's not expensive for what Lowe's is historically. Its price to earnings ratio forward, right, is down here in the 18, 19, 20 area. Its revenues, look at that revenue growth. And that revenue growth continues. Here with Lowe's, even with the drop in lumber prices. Price to book value, pretty expensive. This is not one that generally has had any sort of price to book type of correlation. Is this as cheap as KB Home? No, it's not. It's definitely not. Lowe's is not as cheap as KB Home. Not even close. But Lowe's has something that KB Home doesn't have right now, and that is a positive catalyst to unlock some of the value inherent in the company. And it is one that has shown some price action that is positively diverging away from the overall market. And one that could definitely see some very sizable upside during the course of 2019. Now, I'm not advocating going and chasing it right here, right now, today, after it's rallied $10. Any of these. It's one where I still think you have to kind of wait for your buy opportunity, not just chase them higher, right? But overall, showing that tendency. Number 3 here, and this is a stock I'm a big fan of. We talked about it last year. We talked about this reversal action that we saw right here. And this is the first time where we saw the bears, the short sellers, go out and put the negative news, people getting sick, that it become this game where, yes, some people were getting sick, but also there was some falsification of all that type of news from the short sellers. And this was one of the first times where we saw it just snap back very, very quickly and, really not even get retraced and put a major bottom here in the stock. We saw it take a real big up here in May, consolidate ever since. Well, did the stock sell off in October, September with the market? It sure did. In December, it actually hit a new low, just like the market. But look at this rebound back. Chipotle's almost sitting at a 52-week high. Market's nowhere close, and the market's not going to get anywhere close to a 52-week high anytime soon. But Chipotle, in a matter of days, has thrust itself all the way back up towards a 52-week high. Yes, they've had a lot of bad publicity. Yes, their numbers are nowhere near as good as what they've been, but their comparables this year are very easy to compare and say, well, what are sales this month compared to this month last year? That's going to be a very easy number to beat. It's not going to take them. It's not going to be like what it's been over the last couple of years, where they had a lot of people coming into the stores and people lining up to buy and lines out the door, and then they go to a year where it's kind of a ghost town. They don't need to get lines out the door again to see a major difference in those same store sales comparisons. And it's one where we could be talking about Chipotle trading in the $700 to $800 range here this year. And it's one that, from a technical standpoint, really nice. You can see the revenue dip that it had. They had a real revenue dip that came in on all the bad pub and all the bad news. But they're still at all-time high in revenue. And it's still a revenue story that's growing. It's a company that has never really traded based on book value. It's always been a revenue growth story, right? It's not been a PE ratio valuation story. It's been a revenue growth story. It's one where, though, the price to sales is very low. Yes, the stock has gone up quite a bit, but the price of the stock relative to its sales really is still in a very cheap level compared to the historical nature of this stock. So Chipotle Mexican Grill, one that I expect to have big upside here throughout the rest of 2019. Stock number 4, First Solar. Now this is one where whenever you go into the solar names, it's very, very difficult to really pin it down fundamentally. If we come in and we just come in and put in First Solar here and we just start looking at it based on revenue, right? Here's the revenue chart. You can see it's at its lowest revenue level since 2011, 2010. I mean, the revenues have, ouch, right? Ouch. It's nowhere near a KB Home story or a Chipotle story. The price to book value, trading below book value, but that's not anything unusual for First Solar. PE ratio on a solar company, it doesn't have one. The earnings are negative. Forward PE ratio, who knows? The price of the stock relative to its sales, actually a little bit higher than it's been. But this is a company that is notorious for big waves. It is a company that tends to do better when oil prices are going up. It is a company that tends to do better when overseas data looks good. It's a company where there's plenty of competition in. But it's also a company that's not going to take a whole lot to go up a whole lot. It's not going to take huge catalysts. Take a look at the sell-off here in September, October. New low. Then we get the December sell-off, higher low. Has that same higher low element that the market itself doesn't have. And oh yeah, on the snapback, coming back to the December highs. This is one that I think you have to be very careful with from a technical standpoint and how you trade it and when you trade it and where you enter and where you get out. But this is one that has an earnings per share growth rate this year, or excuse me, earnings per share growth rate this year of 152%. 152%. When we look at companies and we go, okay, who are some of the highest growth companies? First Solar is high on that list. First Solar's growth element here, because of how bad it's been, it's not going to take much to grow a whole lot. And that growth isn't going to get it to where it was, but that growth is going to look mighty fine from a numbers standpoint and going to attract a lot of money. Oh yeah, it's also 15% short. There's a heavy short interest in it. So a positive catalyst here for First Solar sends those short sellers out. That's 15%. That's a huge number. That is enough to catalyze a massive move to the upside here on First Solar. So one of my favorites out there, in the market right now, and one of my favorites going here through 2019. Number 5, General Motors. And you'll say, well, Jeff, General Motors, you always talk about General Motors. Every time you do a list, you talk about General Motors because you know what? General Motors is always cheap. Yep, it is. It's always cheap. It's always inexpensive. Its price to sales is 0.34. For goodness sake, it's 0.34 price to sales. Its PE ratio here on General Motors, 57. And you say, well, what's the big deal? 57. Well, it actually has a PE ratio now. What does that mean? It actually has positive earnings now, which is a change here for it. Price of the stock relative to book value, 1.3. Cheap. Not historically cheap, but cheap. And revenue, this has been their problem. Revenue growth, or the lack thereof. But think about where we are right now. Think about market perception right now. Think about what's going on. We have analysts coming out and upgrading a lot of the steel companies. Well, who do the steel companies provide to? GM, Ford, right? We have companies that are, they're cheap. Ford, GM, they're very inexpensive. And they would be given a much higher premium and a much higher multiple if they had some revenue growth. If you want to make a bet that, hey, you know what, the economy's not going to fall off a cliff, and instead it's actually going to heat up a little bit this year, I think GM is one of the best places you can make that bet at. GM is also a stock that, sold off June, July, August, September, right? Market started selling off in September, hit a new low with the market in October. Look at that snapback. Oh, December sell-off, higher low. You notice a theme there. We're dealing with a company that you have to have things go right. But if things even go a little bit right for GM, it's a $60 stock. And we'll still look at the fundamentals and go, man, this isn't all that expensive. This isn't all that expensive. I know it's easy to be sour on trade war and trade war negotiation and what's going to come of it. But imagine if what comes of it is more cars from the U.S. flowing into China. What's that do for GM? What's that do for the revenue growth of GM? If you think that's not what one of the big fights is about, well, go take a look. It is one of the big fights. Manufactured goods, GM. If GM is able, or through these negotiations, some of those barriers come down, and GM is able to gain a little bit more of a foothold or even get a little bit of growth in China, we're talking about a stock that can have a huge positive catalyst, where we're not talking about, where does it go relative to the past year? We're talking about GM, and we're talking about it trading up in the 60s and still being able to look at it and go, it's not all that expensive. It's not all that expensive. To me, that is something where if you're looking for massive upside, those small cap home builders, but something like GM, and to not have a huge downside. Meaning, GM can sell off and it can go down to 30, maybe 28. But it's not coming into single digits or anything like that. It's not going to, it's not a company that's, going to be going under. It's been going through some of its worst. Those are my top 5. Now, I mentioned 7 here for this video, so I'm going to show you 2 more. And these aren't things I'm going to give a fundamental argument, but I'm going to just show what's been going on here with them. Here's Twilio. This is a company that last year went from 32 to 100. And you say, well, wait a minute, it's all gone. All the gain is probably gone. How can it keep going up? This is just a massive move. I can't go buy into that. If I back this out, you can see 25 to 100. You'll notice most of its big upward moves happen on earnings. This is where most of its big moves came. Outside of earnings, yes, it had a few times where it made some decent runs, but the big moves really happened on earnings here with Twilio. It's a company that has continued growth and growth to a massive degree, a company who has acquired other companies to increase that growth. Yes, it is a company that has a forward PE ratio of 610. Yes, it is absurd. The valuations here are absurd. But it is also a company with 48% earnings per share growth expected next year. 48% on 68% sales growth. Apple doesn't have that. Facebook doesn't have that. Amazon doesn't have that. Alibaba doesn't have that. You think of some of the biggest growth companies out there, they don't have that. Now, is it trading at 22 times book value? Yep, it is. It's trading at a monster premium. But this is also another stock that yesterday hit a new 52-week high. You think about where the market is, you think about where Twilio is. There is something very different going on with Twilio than the entire market. It is a story unto itself, and it's a story that's in the middle innings. It's not the beginning innings. It's a story in the middle innings with a lot more to come. Last but not least, EWZ. Now, what's EWZ? EWZ is Brazil, and you've heard me talk about this. We talked about Brazil right back here. We talked about this double bottom and the positive divergence was there. We talked about some of the negative pressures coming off of Brazil. Brazil made a monster run. And as the markets, the global markets collapsed in October, November, and December, Brazil did what? Brazil consolidated. And as the global markets, just bounce, what has Brazil done? It has been a massive, massive breakout here. This is possibly one of the biggest potential growth stories out there in the world right now. Possibly one of the bigger beneficiaries to trade war resolution and trade war change. This is, Brazil market here Brazil's gone through a real trying time. You can see that, this is not, Brazil market is not one that has put on massive gains over the last 10 years like the rest of the world. But something's different right now. The price action's very different right now. You don't hear a lot of people talking about it. You don't hear a lot of chatter about Brazil and what's going on there and what's happening there. But I would argue that the price action that we see in Brazil is very indicative of what we saw 2003, 2004, and kind of pushing into at this stage where we could see multiple years of serious expansion or serious growth in the Brazilian market. You can get exposure with the Brazilian ETF. You can get exposure, with something like Banco Bradesco, one of the banks you hear me talk about, and look at this multi-year consolidation, 10-year consolidation, right? Is it ready for a breakout? Well, high or low coming into play. A lot of positive dynamics here with Banco Bradesco. You look at something like a PBR, which is not cheap at all, okay? But this is a company that is known to make some pretty big runs. We have oil moving on higher. We have some real positives in Brazil and some real positives for PBR. Vale, which is one of my favorite ways to play Brazil historically, but it's a little more of a China play than a Brazil play. But there are plenty of ways to get exposure here. But I think those are two areas, Twilio and Brazil, where, by the end of the year, you could be looking back and seeing Twilio trading at $260. And go, wow. Now, is it possible for it to be trading at $10? Yeah, it's possible, but probably not, right? Twilio. Brazil, can you look at the end of the year and go, wow, Brazil was one of the best performing markets in 2019 around the world? I think it's a high probability based on the money flows that we have seen here over the course of the last 6 months. This is not a January effect. Oh, the first 5 days of January are this, so this is going to happen for the rest of the year type garbage. This is something that we have seen major market offset. We have seen major market disruption. And through this offset and through this disruption, we have seen several companies emerge, several companies where price action is just different. And we see that within a few companies. We also see it when it comes down to the Brazilian market. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.